salary, bonus, stock compensation, unless he achieved these goals. And they were tranched. There were 12 tranches. But he accomplished what at the time, 2018, most people were saying was laughably impossible, number one. Now, we thought it was possible with brilliant execution. But most, if you listen to the analysts and other auto manufacturers back then, they more often than not used the word, possible bankruptcy. That's how much he was betting the company. And that he did. And he accomplished something phenomenal. And really, at the beginning, the value of the pay package was $2.3 billion. The reason it got to $56 billion was the performance, which was outstanding.
Cathie, I'm also interested to get your take on how critical you think Musk is to Tesla, because we've had analysts come on the show, Cathie, who cover Tesla, and they'll kind of suggest, in their opinion, he is almost foundational. They'll say things like Musk is Tesla, Tesla is Musk. Do you agree with that, Cathie?
I think Tesla, Elon Musk has been incredibly important to Tesla and still is. Not so much on the electric vehicle side, that's on automatic pilot. It's on the autonomous side, which is the reason we anticipate that the stock will scale to 2,600 in our base case, given our research, in the next 5 years. In fact, the probability of autonomous has gone up dramatically here because of breakthroughs in AI, which Elon and his team are harnessing. And this is a winner-take-most opportunity. The first autonomous taxi network to evolve and get people from point A to point B as safely and quickly as possible is probably going to win the lion's share of a given market. I think this will be country by country, or maybe continent by continent. So, and we think Tesla is in the pole position, certainly here in the United States, and we were very pleasantly surprised that China has invited Tesla to partner with Baidu on the Apollo autonomous project. I think the signaling there is the Chinese companies are trying to go autonomous and beat us at this game, but they have been unable to do so. And just like on the electric vehicle front, they've invited Tesla in to help them, to help show the way.
I want to dig more into autonomy, but first I want to linger on the vote for a little bit more, Cathie, because what I'm curious about is Musk has been quite vocal of what he wants here. He wants 25% voting control of Tesla. He has said that if the pay package didn't go through, although it seems like indications are it's going to go through, but that if it didn't go through, he was going to take some of his AI technology to one of his other endeavors. If the pay package indeed does get passed, what's your level of confidence that he won't still at some point get angry at something? He is mercurial, and take that AI technology elsewhere?
Well, first of all, and just to finish off on the last question, once autonomy is in place, and we're almost there, anyone who has FSD, full self-driving, today knows that every 2 weeks now we're seeing leaps in performance. And so we do think that autonomous is almost here. And then you can ask me the question after that happens. In terms of taking his AI strategy elsewhere, I think what many people do not understand is Tesla is the largest AI project on Earth. Autonomous mobility is the largest AI project. We see revenues scaling in the entire ecosystem globally to $8 to $10 trillion from essentially nothing now in the next 5 to 10 years. And the taxi platforms will get half of that, again, country by country or region by region. So we think that Oh, I've lost the question. Julie, I'm so sorry. It was about the package. Oh, yes. Would he take his marbles and go somewhere else?
Yes.
Well, I think what many people don't understand is the most important variable, once you've got the domain expertise and the AI expertise, is proprietary data. And Tesla has probably more proprietary data than almost any company in the world. Elon Musk is the CEO of this age that we believe is going to best capitalize on the convergences between and among technologies. Autonomous mobility is three of the platforms: robotics, energy storage, and artificial intelligence, converging technologies that are going to create explosive growth. The other companies, we don't think are going to change humanity as much, or the environment, shall we say, as much as Tesla is. And I think Elon is passionate about that topic. The other companies are AI companies. He's going to harness AI and create, in the case of X, the Everything app. We do think that's his plan there. But the biggest project is this one. The most challenging project is this one. And I don't think he's going to leave until he sees autonomous on, I guess you could say, automatic pilot.
And Cathie, as you're kind of suggesting there, you know, Musk is a busy guy. He's always been a busy guy, but he seems busier than ever. I mean, as you're mentioning, Tesla, Neuralink, you know, XAI, X. I mean, are you, as an investor, Cathie, are you ever concerned that he's spread too thin at this point?
I am not, because again, of this convergence idea, we almost need CEOs to become multidisciplinary in order to understand how the world is going to work. And Elon epitomizes that, right? In terms of AI in each of the projects, autonomous mobility here on Earth, in space, and AI projects elsewhere. So this is really, even Neuralink, there's AI, they're harnessing AI there as well. So I think that he is becoming a better executive from a strategic positioning point of view because of his focus on these various AI projects.
Cathie, I know you have a longer time horizon. We've talked about this frequently, as that's evidenced by your firm's now analysis going out to 2029 for Tesla and where it should be. But Tesla's down this year, and your benchmark ARK ETF is down this year, but it's also down over the 3 and 5 year periods. And so I'm just curious how you're thinking about strategy with regard to Tesla and more broadly given that.
Well, given our price target, as you say, Julie, we have a long-term time horizon. The reason Tesla is down is because EV sales are much weaker in this macroeconomic environment, and there's price discounting. Many people ask us about that. We would worry more about the traditional auto manufacturers as electric vehicle prices come down below gas-powered car prices. So we've got our eye on the prize. It's a 5-year investment time horizon. You are right, the 3 and 5 year numbers, we have not met our 15% compound annual rate of return over a 5-year period. And I think, and I know the reason for that in this particular case was the shock that we saw coming out of the Fed, a 24-fold interest rate increase in little more than a year, which absolutely crucified long duration assets. ARK epitomizes in the equity world long duration. We have a 5-year investment time horizon, whereas most have 1, I would say, these days. So we understand why. We think we've paid our dues in terms of rising rates. If anything, the recent inflation data suggests interest rates will fall this year, and the number of dot plots is increasing once again. That should accrue to the benefit of our strategy. This year, the backup or the underperformance has had a lot to do with going from 6 interest rate cuts expected at the end of last year to at one point 0 or just 1. Now we're up to 2. And we think as inflation continues to surprise on the low side of expectations, which we do believe because innovation is deflationary, gasoline prices are coming down now. Rents are coming down in many, many cities. So we do think interest rates will follow. If we were one of the worst disadvantaged or the worst hit among strategies, our long duration strategy, just like long bonds, long duration